Hey everybody, it's Pete. Good morning. It is Wednesday, July 1st, 2020. Welcome to today's episode of Stocks for Breakfast. And we have a good one for you today. We're going to go way back old school, and we're going to talk about momentum trading today. It's the only thing I did when I first started trading. I guess you could say that's how I cut my chops. And the reason I want to bring it back to you is that it can really help you fine-tune your entries and exits into positions. Now, I want to give a little, not warning, but it's definitely a little bit of an advanced tactic. I don't teach it so much anymore as I'm going to show you how what I don't teach anymore is something you can apply actually on the charts. And it's kind of something that we are pretty well known for now in the tape reading community, especially in the boot camp. And it really comes down to how do you identify when your stock has obvious buying or obvious selling, and then how do you determine when that's slowing down so it might be the right time to book a profit. So momentum trading is more where you're just looking for the next move, and you're looking for the next move to slow down and stop and maybe even reverse. And what we did back in the day, again, mostly NASDAQ trading, if not 99% NASDAQ trading, way back in 2000, probably like 2000 up to 2006. It was you were looking for a trade that was bottoming out and then looking for the next move higher, looking for the next trade that was bottoming out and then looking for the next move higher. We weren't really position trading, and I'm specifically talking about day trading here. We weren't really position trading. We weren't really looking to build ideas. It was really more we're looking for the next push and then get out, looking for and just constantly keeping your money at work. And as I said, up till 2000, this is when things were still in fractions. They kind of changed a little bit. Actually, no, I'm sorry. Fractions changed in like 2001 or 2002. I don't remember the exact. I want to say 2001, but the principles remain the same. What I remember very vividly is that people were saying that all the volatility was going to get sucked out of the stocks that we trade, because back then you had a stock had to go from, let's say, 20 to 20 and 1/16th. So it had to move 1/16th, and it went from 16th down to a penny. And basically 1/16th was 6.5 cents. And everybody was like, how's the stock going to move 6.5 cents? It's never going to happen. We'll be waiting all day for the thing to move. Of course, that never came to reality, but momentum trading still does exist. So a lot of people might call this level 2 trading. You might call it scalping. We actually have another scalping video that I'll pop in here that you can watch. But what we're going to talk about today is why I don't teach it the way I used to teach it, why I don't use it the way I used to use it, and why I don't believe it's even necessary to use. There's absolutely some people teaching it 100% okay. I'm just telling you, I'm speaking more to the person that doesn't want to watch every single tick. It will drive you nuts. It will exhaust you, especially if you're a new trader trying to gain your confidence and get to the next level. So I'm going to show you what happens in the actual prints. And remember, I'm known for tape reading. I take people from chart readers to tape readers, and this is really like the most minute level of tape reading where you're literally watching what's on the tape, and it's called time and sales. So you have your quotes in level 2 box, and then within time and sales, you're actually seeing the trades go off, and that's what's known as the tape. So what happens on the tape usually tells you the buying and selling pressure at that exact moment. But what I've done and what I've taken away from this super tiny active window is I've put it on the charts, which makes it a lot easier for us to read the tape without watching every single uptick, downtick, and quite frankly, I'm a little bit older now. I don't want to do that anymore. By the way, if you find these videos helpful, absolutely click down and subscribe. That would mean the world to me. If you have any questions about what we cover, absolutely leave feedback, because I'll definitely answer. Maybe you can follow up with a separate video. And if you might be interested in trading together for the next 30 days, click down and learn about the boot camp. We're starting to fill up. It's really exciting seeing people have some revelations about how simple actually trading could be. So we're going to go over to a simple, we're going to pull out the spreadsheet again, where I'm going to show you some numbers, and then we're going to take it over to the chart. When I say numbers, I'm going to show you a time and sales differences between when it's really active selling, really active buying, and how to spot in time and sales when your stock is turning. Now, the reason I don't do this anymore is because it's a lot more electronic, active, computerized trading than it was back in the past. Back in the past, when market makers and specialists were involved in the stock, They would physically have to place the orders and physically buy, sell, and then place the orders. And this was also known as SOES trading back in the day, SOES, which was small order execution system. Specialists more involved, so prices moved a little bit slower, and they were manually placed, so you could literally see where the momentum was stopping and slowing down. Now those same bigger orders, the same order flow, which is another thing that obviously I'm known for, right? The order flow is now electronic, most of it. I think 75% of the executions that happen on all of the exchanges now are electronic. So those same million share orders are much more frequent and much smaller prints that are harder to interpret because there's so many of them. But I found a way to do that on the charts, which is what I'm going to show you today without having to watch every single one. But you need to know what's happening so that when you see it on the charts, you'll have a much clearer picture, because isn't that really what we're looking for? We want conviction when we're looking at the charts. We want to have an idea. Here's a caveat, though. Here's something that I want to get across. Momentum trading is calling the next move. It's calling the next wave to the upside, wave to the downside, and then we're looking for that wave to the upside, the downside to slow down, and how to recognize that. Don't get too caught up in if you're looking for bigger profits. Momentum trading will be a way for you to tell you when your stock is slowing down, and you could add or look to add to positions at that spot. But if you're getting in and out when you see momentum, you're going to be trading a lot more often, which again, there's nothing wrong with that. It's just that I'm kind of preventing somebody coming back and saying, well, I read the tape, I did momentum trading, I got out of the stock for $2 and then went up 2 more. I got out because of momentum trading. So I kind of want to tell you, it's a part of order flows. When you're trading and you're trading well, you need to know what kind of day it is. And the day it is will tell you how you should manage the next pause. So if a stock goes to the upside and pauses, if it meets all of the criteria, which again, that's what I do. I teach people how to read the tape. If the argument's still really good to hold that trade, during the pause, when you see momentum slow down, you'll be looking to add to the position. If it's a tighter market where there's not a lot of momentum, whether it's you're watching the VIX or the market internals or the sector or just the market in general, and we're not in an environment where we're seeing a lot of obvious buying or selling, which I'm going to show you right now, when the momentum slows down, you'd be a little bit more likely to be booking profits as opposed to adding to a trade. And remember, that's the big difference between somebody who gets paid on a regular, consistent basis and goes to the bank or now deposit, right? Well, just wire everything, versus somebody who's frustrated because you're not recognizing the conditions. And that really is what tape reading is about. So we're going to go old school today, but way back to 2000 when I first started to learn this stuff, and then we're going to take it into today, 2020, and how you actually see it on the chart. So I know that's kind of, I wanted to give you the full context, not only what it is, but how to use it properly. So we're going to jump over to, the other day we did a video on understanding how to place your orders, and we talked about the bid-ask. So the bid is where advertisements are to buy. So those are limit orders to buy. And in this example here, we're using 50, 25. The ask, which is sometimes also known as the offer, is where people are advertising to sell. So this is what is known as a time and sales window. And it's an exaggerated time and sales window, but not really by that much. So if somebody wants to buy, they would advertise to sell, advertise on the bid. If somebody wants to sell, they advertise on the offer. But what if somebody on the offer is not getting filled? What if they really want to get out of the trade? Maybe for whatever reason, the futures just started to dip, or you're in a really strong profit and you want to get out, and you try and offer, but all of a sudden you can't get filled. This is what you'll probably see in time and sales. Red time and sales, which you can see the price here, and then the price goes lower. That means now people on the ask are not getting filled, and they are actively now selling to people on the bid. So you'll start to see active selling, active selling, active selling, active selling. So the red side of time and sales lights up because people are now not waiting to get filled. They're selling, they're selling, they're selling, they're selling, and now prices actually start to go lower. So it was 50.25. Now they're selling at 50.24 and 50.23. So they're not advertising anymore. They're actively going to sell. The opposite of that happens now is, let's say you're advertising to bid and you can't get filled for whatever reason. Maybe the stock is still going higher. It's drifting higher. What you now need to do is, if you really want to get into that stock, or if you're short and want to get out, but let's use the buy side. If you really want to buy that stock, you'll now start to actively buy from people who are advertising to sell, which is happening on the ask. So instead of advertising your limit order here, you now step up and you buy at 50.26. And now all of a sudden, if a lot of people see the same thing happening, you'll start to see time and sales flurrying with green, consistently seeing green, and then ultimately you'll see higher prices where now the bid ask moves higher, and that's where prices start to move. Now, once you start to see it go, in this example, let's use this side here, active buying 50.26, active buying 50.27, active buying 50.28, all the way up to whatever price. And again, extrapolate out because it could go up $1, right? So what happens eventually is that the orders start to slow down. You start to see much more speed of orders. You start to see them printing 26, 27, 28, all the way up to a point where the buying in that window kind of saturates itself and it slows down a little bit. And this is how you call market turns. So when you start to see short-term, and I'm talking intraday here, I'm not talking about something on a daily chart. You start to see intraday on the tape where the buying now becomes indecisive. You start to see, so let's say the price was all the way down at 50, started to go all the way up to 50.25, 50.26, and now you're starting to see, well, some people are actively selling, some people are actively buying, some people are actively selling. So now there's indecision about where the market and the stock happens to be at that time, and that's usually where the momentum slows down and you either go pause sideways or that's where it turns around. So if you're looking to trade momentum to the upside, you keep staying long as the prints, again, the prints are the tape, are predominantly green. You might see red in there once in a while by somebody panicking out of a position or getting out of a trade, but as long as they're consistent and consistently green, your stock is going to be moving higher. When you start to see this, and prices don't matter here, when you start to see red and green and red and green, that's when you get indecision about the next move, and that's usually where you get a pause and a reversal. So as it moves to the upside, you're looking for all green. When you start to see red, green, red, green, red, green, that's typically where it starts to turn around. And then when you start to see all red back down to the other side, and the process happens all over again. So I want to make it clear, this is an advanced topic. It's not something I really teach anymore as a way to trade because electronic trading has really taken over the market, obviously. So watching it, I'm not saying it can't be done. I'm saying I don't teach it because I want to make it easier for you. I'm showing you the core of what actually happens. Now I'm going to show you how to spot it on the charts in a way that's super, super easy to recognize intraday momentum if you are a day trader. Okay, so let's go back over to the screen, and now we're going to go into the charts. So we're going to use Netflix as an example, and it's a 5-minute chart from yesterday. So this window right here would be considered momentum. You see that the candle opened down here, closed up here, that's what makes it green, and then happens for 3 candles in a row. So this is where you would see your time and sales window look like this. It would be all green, and it's lighting up higher prices. People are paying higher prices, higher prices, higher prices with consistency. So the stock basically went from, let's say, 450.64 up to 453.18. So let's just call it a $3 move, right in that window, right? But then what happens? You start to see indecision. You start to see what I call melted candles. Melted candles represent indecision. So you start, this is an energy candlestick, another energy candlestick, another energy candlestick, followed by indecision. If you're a regular subscriber to the channel, or if you're in the boot camp, we go over this every single day. This is also known as well bid, and this is where I came up with that term from way back in 2000. Goldman Sachs or Merrill Lynch or Morgan Stanley, one of the big firms, First Boston, was on the bid and buying stock. That stock was well bid. The level 2 quote was going higher and you saw green, higher and you saw green, higher and you saw green. Obviously, we're not doing that anymore, but you can see it here on the charts. So what happens here? We have green, 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 green in time and sales, mostly green and frequently. Then this happens, right? So that's this. That's what's happening over here. You're starting to see indecision. There's prints on the bid, prints on the offer, prints on the tape, prints on the tape on both sides. It goes up, it goes down. It's not consistent. And indecision is what slows down this momentum. And that's where you would either add to the position. Again, you have to learn how to do tape reading or get out. So now you start to bounce to the upside again, right? Green, 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 indecision, change, right? So I'm showing you now what's happening here so you don't have to stare at this and drive yourself crazy all day. Starts to move higher, well bid, still hitting the offer, right? Taking the ask, which is buying actively because they're creating higher prices, right? That's the only way it can happen. You're paying higher prices, right? Indecision, indecision. Now we see a bunch of red prints. So now we're over here. Now we need to determine what's going on. So we see indecision again. All of a sudden now a bunch of red prints, followed by indecision, which starts momentum again in the other direction. So I don't want to go over a million charts because you'll be able to find it right away. But what I think is super cool, for lack of a better way of putting it, is we pulled all of the stress out of watching level 2, but I gave you a little bit of history of why what's happening on the charts without having to watch every tick. Because I get a lot of questions about, do you teach level 2 trading? Is level 2 trading necessary? 100% it's not to be successful. I'm proof of that. And everybody who's in my community is proof of that. We're not watching level 2 boxes. We're watching what's happening in level 2. We're tape reading and seeing that on the charts. And then the real exciting part of tape reading is when you can put what's happening on these individual charts in the bigger picture, build an argument for which stocks have the greatest likelihood for moving in that direction. And then you really start to have a good grip on what's going on. And that's when you come into the market every day expecting to make money because you know what you're looking at. At that point, the only downside that you will have in the market is when you personally blow your trading plan and don't follow it. People in the community who are following the plan and following it flawlessly avoid situations where we see a lot of indecision and effortlessly place trades when we see obvious order flow, obvious momentum, and reasons for hanging on to those trades. So kind of cool. We went old school and brought it all the way back to today. If you have any questions, and especially if you have some success stories, this is kind of you can implement this one right away. If you have some success stories, definitely leave a comment. I'd really love to hear it. Click subscribe. That would mean everything to me, as well as if you want to trade with me personally over the next 30 days, click down and learn about the boot camp. See how other traders are doing. See what's involved, and I hope to see you there. And have an awesome day, everybody. Thank you.